Hi everyone, I hope you all safe and healthy with your family and friends. This video we are going to learn about 11th Standard Accountancy, Chapter 10, Depreciation Accounting, Exercise Sum number 10. Rahul purchased machinery on April 1, 2014 for Rs 2 lakh. On 1st October 2015, a new machine costing Rs 1,20,000 was purchased. On 30th September 2016, a machinery purchased on April 1, 2014 was sold for Rs 1,20,000. Books of accounts are closed on 31st March and depreciation is to be provided at 10% per annum on straight line method. Prepare machinery account and depreciation account for the years 2014-15 to 2016-17. What they given? So Rahul purchased two machines. Okay, the first machine purchased dated on April 1, 2014, and second machine purchased dated on 1st October 2015. On 30th September 2016, when he purchased first machine dated on 1st April 2014, that was sold for Rs 1,20,000. Listen here carefully. On 30th September 2016, when the machine purchased on 1st April 2014, that means first purchased machine. When he purchased first machine, that was sold for Rs 1,20,000 rupees dated on 30th September 2016. So, the closing accounting period is 31st March every year. Depreciation provided for 10%. They followed straight line method. We have to prepare machinery account and depreciation account for the years are given here. Okay. So, we have to find the calculation of two machines, machine 1 and machine 2. Listen, before that, whenever they sold an asset, whether they get profit or loss, we have to calculate it first. Okay, so the calculation of the profit or loss on the sale of asset, the format is particular amount rupees. Okay, first we are going to find out first machine's depreciation or whether they get profit or loss. Okay, the cost of first machine is 2 lakhs rupees. When did they purchased? 1/4/2014. We have to find out the depreciation for 2014 to 15. The original cost of the asset, that means machinery, is 2 lakhs rupees. Depreciation rate is 10%. After cancel it, you will get 20,000. So this is the depreciation value for 2014 to 15. We have to subtract 20,000 from 2 lakhs. You will get 1,80,000. So we are following the straight line method. So for that you have always taken original value of the machinery to finding the depreciation for every year. Okay, so now we are going to find out depreciation for 2015 to 16 with original cost 10% depreciation. After cancel it, you will get 20,000. Okay, this is the second year 2015 to 16 depreciation value. You have to subtract 20,000 from 1,80,000. You will get 1,60,000. And then you have to find provide the depreciation up to sale of asset dated on when did they sold asset? 39. That means September 30, 2016. They sold machinery 1. Okay. So up to that we have to provide depreciation value. Okay, so for that you have to find the depreciation for the original cost 2 lakhs rupees with the 10% depreciation into 6/12. How can you get it? You have to find that. You have to take April 1 to September 30. In between date you have 6 months from April 1, April, May, June, July, August, September. Okay, 30th September. How many months? You have 6 months out of 12 months. Okay. After cancel, you get 10,000 rupees. So after cancel it, you will get 10,000 rupees. This is the depreciation up to sale of asset. Okay. So you have to subtract 10,000 from 1,60,000. You will get 1,50,000 rupees. This is the book value of when you sold asset. Okay. So the selling price is given that is 1,20,000 rupees. They sold machinery 1. So now you have to find out the differences. Then only you can find whether they get profit or loss. So for that you have to subtract 1,20,000 from 1,50,000. You will get 30,000 rupees. Is it profit or loss? So for that the selling price is less than that of the book value, you will get loss. Whenever selling price is more than that of the book value, you will get profit. Here selling price is less than that of the book value. So Rahul get loss on sale, rupees 30,000. You find the first machinery's value. Now we are going to find the machine 2 depreciation value of machine 2. Okay. When they purchased on 1st October 2015. Okay. The cost of machinery is 1,20,000 rupees. Okay. The depreciation, we have to find out the depreciation value of 1,20,000 rupees at the rate of 10% discount, 10% depreciation value in straight line method, dated on from 1/10 to 31st March. Okay. In between that we have 6 months out of 12 months. So after cancel it, you will get 6,000 rupees. Okay. So listen. 1666 26 are 12. 0 cancel, 0 cancel. 1 2 is 2. 6 2s are 12. This 3 0 is carry over. So you have 6,000 rupees. This is the second year depreciation. That means 2015 to 16 the depreciation value is 6,000. You have to subtract 6,000 from 1,20,000. You will get 1,14,000 rupees. So you have to find the next year depreciation for the another machine 2016 to 17. You have to take 1,20,000 because you are following straight line method. So you have to take always original value of the machine, original cost of the machinery to another machine. So you have to find the depreciation for 10% from 1,20,000. You will get 12,000. 0 cancel, 0 cancel. You have 12,000 rupees. This is the depreciation of 2016 to 17. You have to subtract that 12,000 from 1,14,000. You will get 1,02,000 rupees. Okay. So we find the depreciation value of 2014 to 15, 20,000 rupees, and the amount of depreciation 2015 to 16 26,000. How can you say? Because the first machine depreciation value is 20,000 for 2015 to 16, and the second machine depreciation value is 6,000 for 15 to 16. We have to add that both value. You will get 26,000 for both two machines, two assets value. Okay. Then the amount of depreciation 2016 to 17 we have 22,000. Why? Because we have 10,000 from depreciation from machine 1 and 12,000 from machinery 2 dated on 2016 to 17. So you have to add 10,000 plus 12,000. You will get 22,000. Okay. So we are going to prepare the machinery account and the depreciation account. First we have prepare the machinery account. So first we are going to prepare the machinery account on ledger account. When you purchase a machinery, the journal entry is machinery account debtor to bank account. Machinery account is on debit side. So you go to debit side, enter the opposite account name, that is to bank account 2 lakh rupees when you purchased 1st April 2014. enter it on dated column. Okay, then at the end of the year you have to provide the depreciation account. Okay, depreciation value. So for that, every year March 31st every year they provided depreciation at the end of the year. Okay, so 31st March 2015 by depreciation account is 20,000 already we prepared. So listen here, 2014 to 15 the depreciation value is 20,000. So we entered. Now we are going to find which side has higher value. Debit side has the higher value. So the higher value we have to consider as the total on. So for that we have to enter that higher value as a total on both debit and credit side. So we entered total 2 lakhs rupees on debit side and credit side. And which side has lesser value? Credit side has the lesser value. How much rupees? 20,000 rupees. Now we have to find the differences. So for that you have to subtract 20,000 from the total value 2 lakhs. You will get 1,80,000. This is the closing balance of the machinery account for 2015. Okay, by balance carried out. Now that 1,80,000 you have to brought down to the opposite side and enter it below the total 1,80,000. And against this you have to write to balance brought down dated on 2015 April 1. Okay, so this is the next accounting period. Opening balance of the machinery account is 1,80,000. Okay, at the end of the year you have to give the depreciation account. 31st March 2016 the depreciation account is 26,000. We already calculated 2015 to 16 depreciation value 20,000 plus 6,000 we got 26,000. Okay, so the amount of depreciation for March 31st March 2016 is 26,000. Okay, and Rahul purchased machinery 2. Okay, second another machine dated on October 1 2015. How much rupees? For 1,20,000 rupees. So to bank account 1,20,000 rupees dated on October 1 2015 we entered. Okay, now which side we have higher value? Debit side we have the higher value. So we have to consider how much rupees? 1,80,000 rupees. So we have to enter it as the total on both side, debit side and the credit side. We enter it as the total. Okay, now we have to find the difference for the lesser side. So for that you have to subtract 26,000 from the total. You will get 2,74,000. So this is the closing balance. By balance carried on means closing balance of the machinery account dated on 31st March 2016. Then that 2,74,000 you have to brought down to the opposite side and enter it on below the total. Against it you have to write to balance brought down dated on 1st April 2016. This is the next accounting period. Okay, so this is the opening balance of the machinery account rupees 2,74,000. Okay, then you have to find the depreciation for the end of the accounting period, that is 30th September 2016. Why you have to enter 30th September? This is the up to the date of sale of asset you have to find the depreciation. So September 30, 2016 Rahul sold an asset. Okay, up to that he find the depreciation value. So September 30, 2016 the depreciation value is 10,000 rupees. Okay, then Rahul sold machinery 1. So what's the journal entry? Bank account debtor 1,20,000 rupees to machinery account. Where is machinery account? Machinery account is on credit side. So you come to credit side and you enter it the opposite account, that is by bank account dated on 30th September 2016. 1,20,000 rupees they sold the asset. Okay, so for that they get loss. So whenever you get loss you have to enter it on the credit side. So So by profit and loss account, how much rupees? 30,000 rupees they get loss. Okay, we entered, and every year March 31st they find the depreciation, they provide the depreciation. So March 31st 2017 by depreciation account is 12,000 rupees on machinery 2. Okay, we entered. Now we have to find which side has the higher value. Debit side has the higher value, 2,74,000. Okay, so we have to consider that higher value as the total. So we have to enter that higher value on both sides. So you have to enter 2,74,000 as the total on both the side. Okay, so now you have to add 10,000, 1,20,000, 30,000 and 12,000. From this you have to subtract the total. You will get 1,02,000 rupees. This is the closing balance of the machinery account dated on 31st March 2017. Okay, now you have to brought that 1,02,000 from here to opposite side and enter it on the below the total. Against this you have to write to balance brought up and dated on 1st April 2017. The next day from March 31, that is 1st April 2017. This is the next accounting period. For the opening balance of the machinery account is 1,02,000 rupees. So we prepared machinery account. Okay, now we are going to prepare the depreciation account. We are going to prepare the depreciation account on ledger account. So we prepare the format of the ledger account already. What's the journal entry for the depreciation account? Depreciation account data to machinery account, right? So where is depreciation account? Depreciation account is on debit side. So you go to debit side and enter the opposite account name, that is to machinery account. On 31st March 2015, you get 20,000 rupees depreciation value. So March 2014 to 15, the amount of depreciation is 20,000. We entered. So we have to transfer the depreciation into the profit and loss account. What's the journal entry? Profit and loss account data to depreciation account date, same amount. Listen. Okay. So where is depreciation account? Depreciation account is on credit side. So you go to credit side, you have to enter the opposite account, that is profit and loss account, 20,000. So both side has equal value. So you have to total it, 20,000, 20,000, we get the same total. The next year depreciation is at the end of the year, they provide the depreciation, right? So March 31st 2016 to machinery account. How much rupees? 26,000 rupees. How can you get 26,000 rupees? Machinery 1, you get the depreciation value of 2015 to 16, 20,000 rupees. Machinery 2, you get 6,000 rupees value of the year 2015 to 16. So you have to add both the value, you will get 26,000 rupees, the amount of depreciation. So we entered March 31st 2016, the machinery account is 26,000. You have to transfer the depreciation account into the profit and loss account. Journal entry is profit and loss account data to depreciation account. Depreciation account is on credit side. So you come to credit side, you have to enter the opposite account, that is profit and loss account, amount 26,000. So listen here, same date and the same amount we have to enter in the depreciation account. So we have the same total on both the side. Now we are going to enter next year. At the end of the next year, March 31st 2017, to machinery account 12,000 rupees and 30th September 2,000 rupees, to machinery account 10,000 rupees. Totally you got 22,000 rupees. we have transferred the depreciation to the profit and loss account 22,000 rupees. So we get the same value on both the side as the total. Okay. So we prepared the depreciation account for this sum. Okay. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.